Welcome to the channel Get Rich. Today we are going to look into a stock analysis of a technology company. So let's look into the stock analysis video. So before looking into the video, so if you are new to this channel, please subscribe this channel, and if you like this video, like, share and comment, and please comment your thoughts. I always like to read all of your comments and I will reply to all of your comments. So if you have any thoughts, if you want to share, please comment in the comment section. Also, if you like to have a free newsletter, you can also subscribe to a free newsletter in the description below. So let's get started. So today the company we are going to look into is Happiest Mind Technologies. So if you look into the Happiest Mind Technologies Ltd, they have revenues of about 97% from the digital. They are the top among any of their peers. They have almost 97% from the digital sector. And if you also look into their active clients, they have 186 active clients, and they have 50 Fortune 2000 Forbes $200 billion corporations, and 87% of their revenues is repeat business. And they have return on capital employed of 33.8% and return on equity 27.5%. And they have ranked 21 India's best companies to work for in 2021. And they have a rating of 4.3 on Glassdoor. So these are some of the snapshots of this particular company. And also this company is founded by Ashok Soota, and he's from Wipro and then to Mindtree, and then he founded this particular company 10 years ago. They had a phenomenal IPO. So the IPO price was about 165 rupees and it listed about 250, 260. Let's have a look at their current price in a minute. So if you have a look at their revenues, they have 800 crores revenues for financial 2021. They have 7 countries in operation, and they have $26 million customers as of financial year 2021. And if you look at their market price, they are currently trading at 1124. At one point they even reached 1500. This company IPO'd at 165 rupees. So it ran up quite a lot. Those who invested in IPO, this company IPO, would have gained really a lot. So let's look into their business segment. What this company, where and how this company generates revenue. And if you look at their business segment, they have 3 main key segments. So the first one is digital business services. So they have offerings here in digital application development and modernization. They have solution accelerators, they have automation and IoT. They have digital roadmap, and also they have digital content monetization platform, and they also have knowledgeable bot creation in this particular sector. And the second one is product engineering services, and here they create enterprise platforms for edutech, universities, insurance technology and legal technology. And they also do consumer solutions, for example e-commerce, health tech and smart living. And they also have data center technologies, and they are also working with several industrial customers. And the third one is infrastructure management and security services. In this particular sector, they mainly work with different cloud services, workspace services. They have service automation, database services, and so on. They also have service offerings in cybersecurity and infrastructure security, governance and risk compliance. They have data privacy and security, identity and access management. So they are working in most of these particular application. They are working with blockchain and of course cloud services and IoT, artificial intelligence, and so on. So let's have a split in their particular revenues. So they have almost 41.6% of their revenue is coming from digital infra and cloud, and then 22.7% from SaaS, and 13.3% from analytics, AI or artificial intelligence, and 10.5% from IoT, and 8.7% from securities. And if you look at their different sector or different vertical, they have 25.6% of their revenue is coming from edutech, and 18.2% from high tech, and then they have 16.4% from banking and financial services, and then 13.6% from travel, media and entertainment. And they have industrial comes in 7.1%, and then manufacturing 6.6%, and other 7%. And if you look at their different product segment or different categories, business segments, so the first one is product engineering services, which is 46.2%, and then they have digital services, and then they have 29.4% from digital services, and then they have infrastructure management services, which is 21% of the revenue is coming from that particular side. If you look into their geography, which countries is contributing a lot of their revenues, so their main key geography is Americas. So they have 73.4% revenue is coming from America, and then 10.4% is coming from Europe, and 11.8% from India, and then few percentage from rest of the world. And if you look into their different contract type, they have almost 78% is based on their time and material, and then 22% is based on fixed price contract. So these are their main business revenue breakdown. And if you look into their year over year, how their different industries perform. So for example, if you look into their financial 2021, so edtech 25% and high tech 18%, which is also, you can see how their revenue evolves over the years between different customer industry group. And also you can see the digital service offering, so how the revenue is changing. So for example, digital infrastructure cloud increased from 40% to almost 42.8% now. So you can see the breakdown how different industries revenues are evolving over the years. And then if you look at their digital revenue, so they have most of the revenue coming from their digital, so almost 96% of the revenue is coming from digital services. And if you look at their utilization rate of this particular company, so in financial 2018 they have 68% utilization rate, and financial 2021 they have about 79.5% utilization rate. And then if you look at the breakdown between on-site and offshore, so they have about 5% on-site and 95% offshore. That's good. And if you look at their attrition rate, so they have what is attrition rate is number of employees which are leaving from the company. So if you look at the attrition rate, it was pretty high in financial 2018 is 22%, 2019 is 27%, and then it reduced to 18% in 2020 and 12% in 2021, because for IT companies their knowledge is mainly their employee knowledge, but also their business concepts and so on, but employee knowledge is very, very important. So if their attrition rate is high, it's a risk, but they are decreasing their attrition rate in this particular company. And if you look at their revenue concentration, the top 1 customer provides 13.4% of their revenue, top 5 31.1%, top 10 46.3%. So it's a little bit concentrated, but it's still okay. So top 20 is 61.5% of their revenue is coming from top 20. And if you look at their $1 million customers in financial 2018, it's 16, and it increased to 26 in financial 2021, and last quarter it increased to almost $31 million customers. And if you look at their average annual revenue per active customer, it increased from $471,000 in financial 2018 to almost $783,000 in the recent quarter. So that's good. They are increasing their annual revenue per active customer. That's very good. And if you look at their big customer evolution, so they have one $10 million plus dollar customer, and their $5 million to $10 million is increased from 3 to 6, and $3 million to $5 million customer in decreased from 6 to 3. So maybe some of their customers from $3 million to $5 million increased to $5 million to $10 million. So that's why that increased to 3 to 6. This is decreased from 6 to 3. So their total $1 million customers is 31, and number of their active customers is also growing. And if you look at their $1 billion corporation, so they have about 50 customers which are $1 billion corporation. So that's good, because they can give more business to this company. And if you look at their project wins, they have project win from different Fortune 100 companies. For example, a Fortune 100 health provider, multi-billion dollar supply chain industry, global leader in information security company, and then one of the largest broker of fine and decorative art, large US retailer, Fortune 100 health insurance company. So they win a lot of key deals in this particular quarter. And if you look at their financial statement, so their income is increasing at a CAGR of 18% over the past few years. And if you look at their EBITDA, it increased huge, because they went from unprofitable company to profitable company recently, and their EBITDA margin was increasing pretty nicely, 1.6% in 2018 to almost 27% in 2021. So their EBITDA increased pretty good. And if you also look at the profit after tax, it also increased quite a lot, because their profit margin was increasing very good. In financial 2021, they did about of course 162 crores in financial 2021. Their profit margin was increasing, so their EBITDA and profit margin was increasing. I believe they reached a point that 27% can be a very good margin, so they cannot grow much bigger. My personal opinion, I think they also guided between 23 to 25% their EBITDA margin. So that's also they are almost reached their EBITDA margin. So now their sales growth will reflect the bottom line growth as well. And if you look at their financial statement, so in 2012 it's just 8 crore, and in March 2021 they did about 761 crores. So they are growing massively. Their net profit is 162 crores in March 2021, and in current year it's 159 crores. The reason being is they have a lot of taxation benefits from their losses in the previous years. So all their tax benefits are gone. So from this year they have to pay full taxes. So that's why their net profit is down, even though their sales they have good numbers in sales. They have to pay full taxes this year. So that's why their net profit is about 160 crores in financial 2022 compared to 160 crores in March 2021. So I believe in the coming years they could do 18 to 20% growth in both revenue and bottom line. So top line and bottom line they can do about 20%. That's my personal projection. And if you look at their return on equity, they are doing pretty nicely. And they did a 5-year CAGR of 17% and 3-year CAGR of 20% sales revenue. So that's good. Historically they did good, and they will also continue to do 20% organically. That's what the management also guided. And if you look at their net worth, they increased to about 545 crores in financial 2021, and their return on capital employed is 31.2%, and their return on equity is 29.8%. These are phenomenal numbers. They are doing pretty nicely. So IT companies, so this is very good numbers. And if you look at their balance sheet, so they are also increasing their balance sheet. They now reached about 1000 crores, and their reserves are about 555 crores. So they are increasing their reserves, and that's also nice. And if you look at their free cash flow, they are having almost about 214 crores as free cash in financial year 2021. So they are almost converting 99.6% of their EBITDA into free cash flow. That's pretty nice. So they have very good free cash flow. So that's also very nice to see. And if you look at their shareholding pattern, so the promoter holds about 50%, and that's constant. And if you look at the mutual funds, they are decreasing their shareholding from May to June to September to December. A lot of mutual funds sold out. So the reason being, as I said, they have 165 rupees in IPO, and it is listed at 250 rupees or 260 rupees in the market, and currently it is trading about 1124 rupees. It even reached 1500 at some point. So it went up very huge or very nice rally, and a lot of the mutual funds took profits because the valuation are also become extremely rich. So that I will explain in the valuation section. And if you look at the mutual funds, so they sold in July, August, September, October, November, December. Net, all of the mutual funds, or most of the mutual funds, are selling out. Are booking profits. So net selling happened in the previous month in this particular company. And also if you look at the top funds which are holding this company, the L&T Emerging Business Fund, and then Nedulus, and then Kotak, SBI, Sundaram Services Regular Fund, and Aditya Birla, Union Small Cap. So a lot of these funds are still holding this particular company. So if you are very long term, so you can also still, even in the valuations are extremely rich, you don't have to take profits. You just ride for example, if your view is next 5 to 10 years, you just continue to hold. You don't time the market. So for new buyers, it's most important to look at the valuations when what price you enter, because if you bought this share about 150 or 250, 300, 400, it doesn't matter. So you are sitting on a huge gain. Even if it goes down, it's okay, because 5 to 10 years this company is going to do phenomenally well, because the founder is from a Wipro and then Mindtree, and also now he started this company 10 years ago, and it already doing phenomenally well. They have a lot of customers and so on. So they are doing pretty good. It's a very nice company, but only thing is the valuation for new buyers. So existing buyers, you continue to hold, no problem. And then if you look at the valuation section, so in 2021 their revenue is 761 crores, and then 2022 882 crores, and 2023 I'm expecting it to 1058 crores, 20% growth. And also the net revenue or net income, it's increasing from 162 crores to about 222 crores in 2023. And the price target with the current valuation, which is the P of 100, which is 1 year 1512 rupees, 2 year 1814 rupees. Even with 100 PR, the price cumulative growth is 35% and 61%. Personally, I feel for 20% growth, P of 100 is extremely rich. So I think, this company is overvalued. That's my personal opinion. You can have contradicting thoughts, but my personal opinion is this company is currently overvalued, irrespective of their very very good company. They are growing very nicely. They have a lot of good customers, but the company is overvalued. That's my personal opinion. So if I have to calculate with a reasonable or conservative PE, so I calculate the PE of 40. That's a conservative one. So if you calculate with that PE of 40, the price estimation, it goes to 605 and 726. um, with minus 46% or minus 35%. So I'm not saying this is going to happen, but if you look at the valuation, it's extremely rich. So if you ask me if I will invest in this stock, personally I will not invest in this stock at this price valuation. So if it comes down to, for example, 600 rupees, then I would look into this company, because currently at 1100 rupees, it's extremely rich. Even if you look at the forward PE, even if you calculate for 200 crores, then it's almost 80 PE even for forward PE. So that's also extremely rich. So this company has to correct. If you are a new investor, so you have to look into this valuation, and then you should wait for the correction to buy. If you're an existing investor, if you have a long term 5 to 10 years, no problem, you can still hold this company. This is a very good company. So please subscribe to this channel if you are new. If you like this video, like, share and comment, and please share your thoughts on the comment section. I'm happy to read your comments, and I always reply to all of the comments. If you want me to analyze any other company, please also put that in the comment section. So thank you for watching and have a nice day.